Welcome to the Strategy of the Week presentation for the 10th of May 2013. My name is Todd Schaefer. I'm the Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. Tonight's strategy is titled COLT 45, and it's the direct result of a contest entry we received from Mr. Kevin Moore for our cherry picking challenge contest we ran in the U.S. market. Happily, it transfers perfectly to the Australian market too, and I'm happy to share it with you tonight. First, a little background. Tonight's strategy had its roots planted in a series of strategy presentations we made last February in both the U.S. and Australian products. We offer new functionality within the VectorVest software that provided the ability to create custom moving averages on any indicator in the program, including any custom indicators our subscribers might create. It does require the use of ProTrader, our plugin module, and so if you need that, we offer a free 2-week trial. Just contact product support. We demonstrated the power of this functionality in a series of strategy presentations which you can find by going through the views. Let me show you how. From the home page of the program, simply go to the tabs at the top and click on the Views tab. On the Views tab, you should have a Views Manager bar to the left. It may already be open. But up in the upper section of this, we're going to click on Strategy of the Week. You can adjust the width of this box by sliding its divider bar over to the right. And here are the strategy presentations I referenced, beginning on the 8th of February, creating custom moving averages. The week after that, we followed with cherry picking with CI up-and-comers, which used CI moving averages to cherry pick stocks. Then we did using custom moving averages on industries. So I offer you those because in those presentations we demonstrated how to create custom moving averages and how to use them in graphs to cherry pick winning trades. In reviewing that body of work, Dr. DeLito commented in his VectorVest views of March 15th, it takes 3 things to successfully cherry pick: a system that works, powerful tools, and a methodology that's easy to use. VectorVest, of course, provides these 3 things to you, but you, dear reader, must provide the most critical ingredient: creativity. Steve, in this case Steve Chappell, our Director of Educational Services, used the VectorVest system of stock analysis, which has worked well for over 25 years, to define his search criteria. An incredibly powerful tool, Unisearch, to find, sort, and rank the stocks meeting his criteria, and he applied a very simple method of graphical analysis to select his candidates. He told us exactly what to look for to become a great cherry picker. He made it sound so easy, anybody could do it. And this week we offer another methodology so easy we think anybody can do it, this time called COLT 45. So let's break down his methodology. I do want you to know that his contest submission is included as a PDF file within the VectorVest views. There's a link within the strategy section, and that PDF document recaps all of his settings and methods. Of course, we are modifying his search to make it work for the Australian market. Of course, with any trading plan, we begin with the when to buy. Kevin suggests that we use confirm calls, and that'll make sense, especially with the methodology he uses for his cherry picking, and more on that later. The second, what to buy. Kevin used the S&P 500 stop ascending search, which is a bottom fishing search using the S&P 500 in the States. For the Australian market, we'll use the All Ordinaires bottom fishing search. So let's move over to the program and take a look at its search parameters. Back in the program, we'll come up to the Unisearch tab, and in the searches bottom fishing group, if I click on that, All Ordinaires at the top, and here are the search parameters. A relatively simple search. We begin with the stock watch list for all ords. The stocks within that watch list must have average volume greater than or equal to 100,000 shares and a stock price greater than or equal to $1. And we sort those stocks RT ascending, so the stocks at the top of the list are in the strongest downtrends. And if that at all sounds contradictory to you, bottom fishing strategies are strategies that take advantage of markets coming off of lows, stocks that have been pushed down in price. And it's a little more aggressive. We look for stocks that have some fundamental strength that are going to rise up off of those lows. In this case, our cherry picking methodology is actually going to make sure that these stocks are trended upward. And so we'll have the benefit of upward trending stocks that have been pushed down in price. Let's run the search on our last confirmed up call and see the kinds of stocks that it finds for us. Last up call was on the 19th of December. Change the date to that, and we'll click Run Search. I'll minimize our search directory to get more real estate, and we can drag this divider line up a little bit. And it'll change from displaying the top 10 to the top 100. I'll click Run Search again. So the first thing that pops out to me is I have a lot of red over here. So I've got a lot of sell recommended shares. RT scores all under 1 at the top of the page here. I do have prices above $1. And if I scroll to the right, I should see average volumes above 100,000 shares, which we do. As I described in the opening, now our cherry picking methodology is going to help us identify the shares in this search return that are actually trending upward. So bottom line, we'll have shares that are in the All Ords watch list, so they have high visibility, 100,000 shares of volume, and priced above $1 that are in uptrends. What a great pool of shares to consider at the beginning of an uptrend. So before we delve into the rules, the methodology requires the application of the Midas Touch graph layout to cherry pick the best stocks. So let's graph these, and let's talk first just about the graph itself. I'm going to come up to our Quick Tool button here, and instead of graphing the top 10, we'll graph all. This is our standard graph layout, and you can see we're in quite a steep downtrend on AQG. Let's change our graph layout to the Midas Touch layout. The Midas Touch layout, as the name implies, was developed to help us time our purchases of gold. And broadly, it was developed to help minimize some of the volatility that we see in precious metals. And so in its layout, you'll see we have a series of moving averages. On the upper graph, we're not graphing price, we're graphing a 10-day moving average of stop price. And if you recall, stop price is a 13-week moving average of price adjusted for the fundamental strength of the company. So essentially, I have a moving average of a moving average. So I have a 10-day moving average of a stop price and a 65-day moving average of stop price. And on the subgraph, we have a moving average of relative timing, a 40-day moving average. Moving averages are very good at smoothing volatile data swings and showing true direction. A 65-day moving average of a 13-week moving average is pretty slow, hence the confirmed calls to give prospective stocks time to exhibit that behavior. One of the cherry-picking concepts we established in our previous strategy presentations is the fanning effect you get with moving averages, where the moving average lines are spreading, showing acceleration. And so it is here. Kevin established some specific rules to define this fanning effect, and he calls them COLT 45. He even gave us a picture. And again, this material is repeated in his PDF. But as you can see, COLT 45 is an acronym that stands for Character of Line Trends. The 45 is a reference to the idealized 45-degree angle or slope of that moving average line. And while the ideal rarely happens, it does give us the idea of bottom left to upper right performance, and this fanning effect of the three moving averages moving parallel. To make sure the share meets this test, he established 5 rules. First, the market must be in a confirmed up call, so the broader market is in an uptrend. Second, the 10-day stop price moving average must be above the 65-day stop price moving average. Third rule, both the stop price moving averages must be hitting new 3-month highs. Next, the 40-day relative timing moving average must be above the value of 1. So by now you know these stocks are in uptrends. And the 40-day RT moving average must be hitting a new 3-month high. And again, all these new highs will be at the right edge of the graph, so you know that these stocks are in uptrends. So those are the rules. Let's begin by applying them to the list of shares that came back from our Unisearch. So back to our Unisearch result. Remember, our search date was the 19th of December. So when we graph all these stocks, we need to reset the graph now to that time frame. So coming down to the calendar window, I'm going to click on it. I'm going to use my quick dates so that my end date, the hard right edge, will be the confirmed up call. And the left edge, I want to be 3 months prior to that, which would be September. And we'll choose the 19th. And click OK. So what we've done so far is all 100 graphs are loaded up into this graphing tool, and we'll click through them in succession. but we're showing a 90-day window with the hard right edge at our search date of 19 December. Now, in applying our rules, Kevin suggests that we start first by just trying to find RT that's above 1 and it is a 3-month high. That being the most restrictive is the easiest to see. So as I click on the vertical scroll bar and we click through these different graphs, I can go rather quickly looking for RT above 1 at a new 3-month high. And you can see I'm going through quite a number of graphs. And I'm finding a lot of graphs that are in downtrends. Pause here, we found one. RT is above 1 at a new 3-month high. Our other rules, though, required that the 10-day be above the 65-day and both of them be hitting new 3-month highs. So we didn't have confirmation in the stop price moving averages, so we'll move on. I'm looking at RT, trying to see RT hitting a new 3-month high above 1. Here's another share. RT at a 3-month high above 1. The 10-day is above the 65, and they're both at 3 months highs. Our first candidate, DXS. So this is one of those exercises that's fairly intuitive and easier to do than it is to read. But we did go through an awful lot of graphs. We're more than halfway down that list of 100 companies. So to make this search easier and to find more viable candidates, I wrote some of these parameters into a search. Let's go back to the Unisearch page. Let's open up the searches directory. And if we come up to the cherry picking group and click on it, we've added a search this week called COLT 45. Let's pull down the window so we can look at some of the parameters. The first 3 lines are exactly the same. All ordinaires, 100,000 shares of volume, and minimum price $1. We still have the RT ascending sort. But what we added is that the 40-day moving average of RT is greater than 1. The 40-day moving average of RT is greater than it was 13 weeks ago, 90 days. Skipping a line, the 10-day moving average of stop price is greater than the 65-day moving average of stop price. The 10-day moving average of stop price is greater than it was 13 weeks ago, and the 65-day moving average of stop price is greater than it was 13 weeks ago. Notice I'm not able to specify that it's at a new high. That functionality is in development, but we don't have it yet, so we still need to go cherry picking to make sure these values are at new highs for those 90-day periods. But this will get us much closer. Searching on the same date, if I click Run Search, we'll minimize our search directory. And if I graph all, I need to reset my date window again. It's probably the thing we forget to do the most often. And right off the bat, here's a good example. NST, the RT is above 1 and it is higher than it was 90 days ago, but it's not at a new high. So let's scroll through some of these guys. There's a candidate, DXS. The one that was well more than halfway down the list on the first tranche is now in the top 10. We'll take a look at just a couple of these. This one doesn't qualify because RT is not at a 90-day high. Here's one, CKF. See if we can find one more. AAD. And so you can see the search makes it much easier and much quicker to find viable candidates. Well, the next obvious question is, does it work? Well, let's run a quick test first with all of the shares that met our cherry picking requirements. Here you can see I've highlighted the shares that we cherry picked. If I run a quick test of the selected shares, running that basket current, we're up 20% relative to the market's 5%. But there was a confirmed down call that intervened. So let's change our end date back to the confirmed down call. And let's rerun the test. So with our cherry-picked list of shares from the confirmed up call on 19th December to the confirmed down call on the 20th of March, our basket was up 12.49%, 12.5%, with an annualized rate of return of 50% compared to the market as represented by the VVC of just under 12%, 4 times the market performance. And did you notice 10 winners? So that's our improved run. Let's compare this to a controlled run. If we come back to the exact same search result, and this time quick test the top 10 instead of our cherry-picked list, we still have 8 winners and 2 losers, so it's improved, but our 2 losers were fairly dramatic, again still outperforming the market with an 18% annualized rate of return, but significantly underperforming our improved cherry-picking methodology. The other thing I would mention before we go, this search is very easy to modify simply by changing your watch list name. Clicking in the value box, you can come to any watch list, including any watch list you create, and specify any universe of shares that you want to examine. Well, if you need help with that or any portion of this strategy presentation, please give us a call on product support. That service is free. Or if because of the time differential, send us an email. If that's easier for you, that's fine as well. And of course, we always invite you to come back to the VectorVest University to look at our previous tutorials. With that, I want to thank you for attending the Strategy of the Week presentation this week. Have a great weekend.